Hey guys, this is Brandon Fredrickson, and this is my first attempt at making a video like this on YouTube, so you'll have to forgive me if the quality is less than perfect. Today what I want to talk about is picking nice bottoms, and that's in the stock market, not at Clearwater Beach, by the way. You know, right now we had the most volatile day in history on Friday. The market and the Dow ranged over 1,000 points. Just last night, the Hong Kong market gained over 10%, and as I'm talking to you guys right now, our own futures market is up close to, a little bit over 300 points on the Dow. So, obviously there's going to be a lot of people out there, this is the bottom, this is the bottom, this is the bottom. And the first thing I want to get out of the way is that the people that are panicking, the people that are like, say, that Jim guy on CNBC, they're just as silly as the people that are out there yelling for the bottom, buy, buy, buy. The people that are yelling for the top and telling you to dump your mutual funds and dump your 401ks at this point, and the stock market, they're just as silly as each other, just on other ends of the silly spectrum. So when you see a bottom in the stock market, there's a very defined process that the market will go through when it reaches that bottom. And right now we're going to have an amazing opportunity to buy stocks. We haven't seen an opportunity like this since 1907, since 1929, since 1933, since 1951, since 1974, since 1987, to a smaller extent 1998. Everybody always says, oh, I wish I could go back to 1929 because I sure would be buying stocks. And quite frankly, this is our 1929. Now, it's not time, at least in my opinion, it's not time to buy stocks right now as we speak. But it's getting very close to being the time to buy stocks. Again, all bottoms have common characteristics and things that they do that are in common with other bottoms in the stock market. A bottom isn't something that occurs on one day and then the market takes off. There will be a sharp pivot where the market just up and then back. But that's going to be a small part of the move. And if you can be patient and wait for the first 5 to 8% of a move so that it confirms to you that there really is strength in the move, that they're not just suckering people in and then they're going to slam it back to the lows. If it's truly the bottom, then you can most certainly afford to lose 8%, missing this much of the move. Now, what you're going to see for the stock market to bottom, there has to be leadership. There have to be strong stocks. A stock market, any market, isn't going to go up without some stocks and some groups causing a lot of excitement and, providing the strength and the catalyst to move the market higher. Back in 2003, what you saw was when the market bottomed, we had different names like Google coming out, so that tech started to lead. Apple turned around and started to lead. And most importantly, we had the energy stocks. We had names like Chesapeake, which, McLennan just got a margin call, but that was one example. Transocean Offshore, Diamond Offshore, ExxonMobil, Chevron. And these are just a few of the big ones. Some of the smaller companies went up several thousand%. And that provided the catalyst that people started making money in those groups. And as they started making more and more money, then those groups started to represent a larger part of the indexes. So the indexes went up more as they went up more. But also, as people had profits in the market, they started to feel more confident in the market, more comfortable in the market. It allowed them to feel more comfortable to go out there and try to find other groups, to try to find other sectors that would lead the way. In the 50s, when we came out of the bear market, you had appliances and bowling alleys and things like this that were the new thing. and they led the market. People went ahead and those stocks went up tremendously, and that tremendous rally in those stocks provided a base of profit for people so that they felt comfortable to go ahead and put money at risk in the stock market again. And that's what we're going to have to see here. So what you're going to want to watch for as the market's coming down, as the market does this, you want to find a stock that's doing this. You know, like, I'm not the most coordinated guy in the world, so let me work this out. This and this, you know. This stock is going sideways. This stock is going down. Those are the ones that are going to be the leaders, because, you know, if the market is getting its head handed to it and this stock can't even go down, it has a very good chance of being a leader. So when the market does finally bottom, what you're going to see is you're going to see several stocks, and you're going to see several clusters of stocks that do the same thing. Maybe it's healthcare, maybe it's hospitals, maybe it's pharmaceutical companies, maybe it is you know, offshoring, or maybe it's efficiency type technology that allows people to, you know, something like Go to My PC, and all those types of companies come out, and it doesn't even have to be that that group itself is so important, but it just provides enough profit for people. It provides enough positive reinforcement that then people get back into the market. If you look historically, that is how every single bottom that has ever occurred in the stock market happened. You have to have leadership first. A bottom doesn't occur like this, up and down. It just doesn't. It goes like this. It goes down, and then you're going to have a long period where it moves sideways, where the volatility is just taken out of the market. Then it might test the lows again, pivot back up. Then as it pivots back up, then you'll see a decline. The decline won't test that prior low. It'll be like 1/3 to 2/3 of, you know, this range here. So it'll come to here, or maybe to here, or to here, and it'll be on light volume, and then you pivot back up on very heavy volume. And when you see that in the overall market, that's when you want to start buying those stocks that have been showing the leadership characteristics that I just talked about, the stocks that have held up. You're just looking for simple relative strength in the stock market, and it's a very simple thing to isolate, a very simple thing to find. If you do that, this will be your opportunity to get involved in the market in 1929, or in 1981, 1987. I mean, this is the opportunity that none of us have ever seen. Now, it's been very tempting to me, because everybody's on TV talking about how, oh, there's value that's been created like we've never seen before. This is the most amazing thing, and you need to buy and buy and buy. And I have an ego just like everybody else, and I want to make as much money as possible just like anybody else, and they are right, this is unprecedented times. And so you think to yourself, oh my gosh, well, this has never happened before. I'm just going to buy some stocks. But let me tell you, the most dangerous words in the stock market are, it's different this time. This time it's not the same as the last time. If you look at history, every time an important bottom has happened in the stock market, it has occurred just exactly as I've described it to you in this video. Watch for those characteristics, watch for those traits, and when you see them, jump all over it. Get involved in those strong stocks, get involved in the ETFs of the market overall, but get in the market. But until then, you need to realize that, you know, as a trader, as an investor, you get paid to make good decisions. You get paid to make good trades and choices, and absolutely positively being in cash is a trade, and it's a choice. If you have any questions about this video, please feel free to get a hold of me, comment here, or send me an email. Thanks for listening. Bye.